Oh, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought of calling Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Good afternoon, welcome to GrainTV. My name's Cody Bills. Today is Friday the 21st for the weekly wrap-up. We had some selling pressure here today, and it wasn't just in the grains. It was across the markets. We saw China selling off. We saw energy, crude oil falling below $40 for the first time since 2009. We saw equities selling off. So selling was a broad-based theme, not only in the grains here today, but again, the grains did sell off. So let's turn over to the grain hedge trading platforms here. We closed off the day. Corn trading down 5.5 cents. Soybeans down 17 cents, closing below $9 at $8.90 on the November contract. And wheat in Chicago here trading down 7.25 cents to $5.04 on the December contract. So we did see some selling pressure. We also have some pretty optimal growing conditions in the weather forecast going forward here. All this kind of amounts to a relatively bearish scenario this Friday. Now, when you look at the chart here, you'll notice that corn has had kind of an orderly consolidation really over the last 6 days following that huge sell-off that we saw on Wednesday, August 12th, when the USDA released their ending stocks estimates, and it was much greater than what analysts were anticipating. But now we kind of move up. We're near that 20-day moving average. That technical resistance level offered up a little bit of resistance, and then you combine that with kind of a macro selling environment, and I think that's one of the reasons why we traded lower here today. When you look at soybeans, it is kind of closing at lows here, breaking through the lows that we saw back in June before we got that run up in prices due to the excessive amounts of rain that we saw in the eastern part of the grain belt. But now, when you get, really following the WASDE report, you have ending stocks projected at significant levels. And not only that, but you also have good growing conditions projected going forward. And when you look at the Pro Farmer Crop Tour, it seems to be, for the most part, their estimate seems to be for the most part in line with where the current USDA yield projections are. We'll talk about that a little bit later on in the show, but let's go into the Pro Farmer Crop Tour. We'll talk about the national yield forecast there at the end, but I just want to kind of break down the way the days unfolded here this week. You'll notice it was broken into two categories. We had the Eastern group, we had the Western group. The Western group started in South Dakota, Eastern group started in Ohio, and then they ended up meeting there in Rochester, Minnesota on Thursday. In Ohio, what we saw is 148.37 bushel per acre average projected by Pro Farmer. That was much lower than the current USDA estimate of 168 bushels per acre. So that is a big deviation there. South Dakota, a little bit of a deviation, expecting to see, Pro Farmer expecting to see 165.94 bushels per acre based on the scouting they did there. That's about nearly 6 bushels per acre over the current USDA forecast. So yes, Ohio's lower, but South Dakota is a bit higher. When you look at Illinois, they came out for the most part on in line with the USDA estimates here, basically expecting 171.6 bushels per acre. The USDA is expecting 172 bushels per acre. So that was a very interesting state. A lot of people were focusing on Illinois because of the variability that they see field by field in Illinois. Excessive amount of rain has affected some fields more than others, and that has a lot to do with how the fields were prepared going into the marketing year. But a lot of variability there, a lot of questions in Illinois, and it's interesting to see that the Pro Farmer Crop Tour very much in line with the August USDA report. Now, when you look at Nebraska here, that is a big deviation here. Pro Farmer expecting to see 165.16 bushels per acre. That's below the USDA expectation on that August 12th report of 187 bushels per acre. So here you can see Nebraska a bit underperforming, and that's a little bit bullish there. When you look at Iowa, Iowa not too far off from the USDA report. You'll see Pro Farmer pegging Iowa at 180.25 bushels per acre. USDA expectations were for 183 bushels per acre, so not a big deviation there. One thing that is interesting, though, is by the time they got into Minnesota, they were seeing exceptional yield potential out of Minnesota. Pro Farmer is pegging Minnesota yield at 190.87 bushels per acre. That is significant, especially when you take into account that the USDA is only looking for 184. So either Pro Farmer picked out some of the top fields, or Minnesota, much like what we've been hearing all growing season, is having a bin-busting crop. So that all factored together was taken into account, and today Pro Farmer released their national yield estimates after the market closed. They are pegging USD, or the U.S. yield average for corn at 164.3 bushels per acre. That is down from the 168.8 bushels per acre pegged in the latest USDA forecast. So basically what we're seeing here, I think this is going to be a bit bullish on Monday, barring any major selling that we see in the macro environment that may spill over into the grains. This could be a supporting factor here for corn, and one of the reasons I think corn has been able to kind of hang in there despite the fact that soybeans has been selling. Soybeans, Pro Farmer is pegging at 46.5 bushels per acre, only 0.4 bushels per acre below the USDA estimate. So when you look at that, you'll notice that soybeans here is more in line with the USDA expectations, and I think one of the reasons why soybeans is likely to continue to see some follow through in the selling pressure that we saw here today. Now let's turn our attention over to the basis. So that was an awful lot to talk about here, Pro Farmer. But now let's talk a little bit about basis, because it is interesting to see corn was able to increase a penny on average across the U.S. We did see ethanol in the western part of the grain belt up 5 to 10 cents. Eastern part of the grain belt, ethanol wasn't a major player here, for the most part unchanged in terms of basis. The Gulf increased 6 cents, but basically most of that gain wasn't able to be transferred upriver to river terminals, which only increased on average 2 cents this week, simply because barge rates also increased, and that kind of negated some of that Gulf impact. Now when you look at soybeans, we did see basis decline, so this is a little bit bearish here. Not only did we see a decline in price, but we saw a decline in basis, down 4 cents on average across the U.S. We saw plants down 7 cents, and some plants as much as minus 10 to minus 20 cent declines. So that's very significant here. What it's saying is that there's not a lot of physical demand here for soybeans late in the marketing year. We are seeing the Gulf increase 8 cents, but terminals were only able to increase 2 cents on average, river terminals across the U.S. So in general, what I think we're seeing here is just a lot of fundamental news that's very bearish for soybeans. Now, I wouldn't be surprised on the open here next week to see some bearish price action there for soybeans, and corn to be able to kind of hang in there. But again, what I'm saying is you're going to have to pay close attention to what's going on in China before the markets open, what's going on in terms of equities, what's going on in crude, because all these factors today really weighed heavily on the grains and could impact some of that pressure on Monday morning. But that wraps up today's show, guys. Thanks a lot for tuning in. If you have any questions, please give the office a call. Number is 877-472-4607. Remember, if you haven't done so already, take a demo of our trading platform. We have a great 14-day free trial. You can view live quotes from your phone. You can also get this platform downloaded on your desktop and be able to trade in the overnight session, during the day session, be able to look up option premiums, be able to execute trades on your own. Just great flexibility there to add to your overall marketing strategy here this year. So if you have any questions about that, please give us a call. Again, our number is 877-472-4607. Thanks a lot for tuning in. We'll see you here on Monday.